What is supply and demand trading, and how has it become one of the most popular trading strategies out there today for retail traders? Let's get straight into it. First, we need to talk about the basics and understand the concept of supply and demand. It's important for everybody to understand this stuff because it is the foundation of the trading strategy. If we search up what is supply and demand on Google, we will get a brief definition of supply refers to the amount of goods that are available, and demand refers to how many people want those goods and how much of those goods. Every day we use it. We go to the gas station. You see gas for $1.50. You're like, hey, that's too much. So I will only fill up a half tank. And then maybe a week later, it's down to $1.45. You can afford that. So now you fill up a whole tank of gas. This is supply and demand. Maybe you go to your local grocery store and you pick up a liter of milk, which is now $5. So you decide to wait another week to hope price goes down. And if enough people are doing that, well then the supplier of that milk is going to have to drop the price to where it meets demand. Now that we understand the basics and the concept of supply and demand, how does this come into the markets, aka Forex, stocks, crypto, futures, options? All that stuff is based around supply and demand. If there's more buyers than sellers, prices have to go up. If there's more sellers than buyers, prices have to go down. Why I think a lot of people like this methodology is it's very simple to understand. It doesn't matter if it's Forex, stocks, futures, crypto, it's all the exact same. 99% of the liquidity trading in these markets is from the big money, the banks and institutions. All right, 90% of the traders lose money, and 99% of the liquidity in these moves are happening from the big money. So the whole concept is to identify where the big money is buying and selling at on the charts, and then simply trade at them if and when prices return. Now, how can we see this on a chart? Now, luckily, these banks and institutions, they leave big footprints in the market by something called imbalances. These are the four patterns that we trade. I will show you an image. These are the four patterns that we use as supply and demand traders. We have a rally-based drop, a drop-based drop. Those are the two supply zones. And demand zones are going to be drop-based rally and rally-based rally. So if we understand 99% of the liquidity and these big moves are happening from the big institutions, we need to be able to identify them where they are buying and selling. Luckily, they leave footprints here on the charts, and you will see footprints represented as imbalances, big, gigantic moves on the charts. You ever go to a chart and then you see these gigantic moves and you're like, wow, a lot of buying came in. Wow, a lot of selling came into the market. These are banks and institutions making these big moves in the market. So when prices return back into these areas of interest, we think about it as that they previously saw value in it. So if prices return into it again, they might see value in it again. I personally don't like to subscribe to the theory of they have 100 million sell orders sitting up here, and then when prices return, now they have 50 million left, and then prices drop a little bit, now they got 20 million left. I don't like to think about it like that. It's much easier to think about it as in they saw value. Why? Well, who cares? They clearly had a lot of sellers that came in right here and dropped this whole thing to the downside. Same thing over here to the upside. A lot of buyers came in from down in here. A great example that I like to share with people in the private group, a good analogy, is if you take two teams, you have, say, Real Madrid versus a Division III soccer team. The skill gap between Real Madrid and that Division III soccer team is massive. At the start of the game, it's going to be 0-0. But by halftime, because there is such a gap in the skill difference, it's going to be, 20-0, right? And then by full time, Real Madrid is going to have their second and third strings players coming into the game, and it's probably going to end, 35-2, right? Give them a goal or two. Let them get a goal. Make them feel good. You know what I'm saying? But if we had Real Madrid over here on the left versus, say, Barcelona, these are two equal teams going at it, and the final score is going to be 3-2, 1-1, 2-1, stuff like that, right? Over here, back here on the right, this is going to represent imbalance. These are going to be big candlesticks in the markets versus an even playing field, you are going to see prices base out, kind of like what you see right here on the chart. What you are seeing here is the four patterns we use of supply and demand. I am going to make another video on this. In fact, I have already made a video that breaks down the four supply and demand patterns, how to identify these and how to trade them. And I made a whole tips playlist on my YouTube channel breaking down how to take profits, what is multiple time frame analysis, how to figure out a good zone versus a bad zone, a supply and demand course part 1, part 2, part 3. That will all be in the description below that you can check out. And if you guys ever have any questions about this as well, reach out to me on social media at Moneyball Austin, Facebook, Twitter, Instagram, and I have no problem helping you out with this trading strategy or any questions that you might have. Let's get back into it. So we just talked about if we have a strong imbalance, like a big skill gap difference, you are going to see zones like this, very strong moves to the downside. Versus if you have two equal teams playing at it, you have an equal amount of buyers and sellers, prices are going to go sideways. It's going to go back and forth, the score. Ball of 55% of the possession is going to be in Real Madrid. It's going to be 50-50, right? Because the two teams are equal to one another. And so that's what we are trying to do. And these are the four patterns that we can use to identify where the big money is buying and selling. And then when prices return back into these zones, because they previously saw value in it, we can look at trading at them again and hope that they see value. Now, like I said, take profit, how to enter a trade, what's a good zone. This is all going to be stuff that I'm going to cover later, and that will be in the description below for that playlist. Here's another example. You look at Euro USD. It's in a clear downtrend. So here is a massive move to the downside when prices were up in here. We're in a downtrend, massive move to the downside right here. So if and when prices come back up into that area because sellers saw a lot of value in it before, we might see buyers step in again. And this is a trade review from Brian. This was a trade that he was taking. Look at this. Let me scroll in so you guys can see. Here, this is one of the demand zones that he was buying at. Right down here. Look at this amount of buying that came in. That's a lot of buying that came into the market. So he is simply putting his proximal line here. Like I said, there's a whole top-down analysis, confirmation, and all that. But he is buying in demand and selling in supply. That is what we have to do. We never buy in supply and sell in demand. We always need to make sure that we are buying in demand and selling in supply. Okay? So if we look here on gold, we can see this is my past week analysis. A lot of selling came in from up in here, right? A big move to the downside. It's not grinding down or anything. We like that area for looking for selling opportunities. We also previously liked this area of demand. We like this area of demand, and we really like this area of demand down in here, right? These are all areas of supply and demand that I'm going to teach you how to draw these zones and trade them in future videos. So that's why you want to subscribe to this channel right away. And let me know in the comments below if you have any questions. All right, notifications on. I really appreciate that. So these are all areas of supply and demand zones. We look at Aussie New Zealand. Look on the monthly time frame. Clearly in a sideways range. Where are the sellers coming into the market? Sellers are coming in down there. Buyers are coming in down there. We never want to be selling in demand. If prices have been down here the last 10 times and you see buyers stepping in, why would you be looking for selling opportunities? All right, clearly it's been holding. This is where buyers exceed demand. This is where sellers exceed buyers. So this is where we want to be looking for buying and selling opportunities, depending if it's in supply or demand, right? Previously, we understand the big money is moving the market, so we want to be trading with them, right? That is the whole concept of supply and demand. And like I said before, we are going to answer more on the methodology later. And if you guys would like to learn about why 90% of the traders are losing money, what separates the profitable traders from the losing traders, and an ebook on this trading strategy, you want to check out this masterclass at moneyballtrading.com. That will be in the description below, where you'll get my top 3 tips on actually how to fast track your trading success. What about becoming a funded prop firm trader? I know lots of people like that. So that will be in the description below. Check out that masterclass. And I look forward to hearing from you guys in the future videos. All right. If you guys really like this video, I appreciate if you like the video, subscribe. It helps me let me know that you guys enjoy this very easy to understand information. All right. I will see you guys later. Bye bye. Cheers.